Hey traders, there's three things I want to do in today's video. One, take a look at a longer term trading opportunity and give you kind of an updated technical analysis on what to watch for. Two, a lesson on swing trading and the pros and the cons of it. And three, I want to give you a free gift that will help you become more organized with your trading. Hey guys, my name is Akil Stokes and welcome back to another episode of The Trading Edge. If you guys are new, I am a professional currency trader. I am also a trading coach over at tier1trading.com, and this is a daily video that we release to both our premium and trial members. Now, if you're new, do me a favor, hit that subscribe button. I do a lot of content on YouTube, so make sure you subscribe. That way you don't miss it. And also, if you're new to the trial, Darren let us know that we've almost had 100 new members sign up for our 14-day trial in the last week or so. Get over on the chat, introduce yourself to our community. We have a great group of traders that we work with. They're very helpful. They will help point you in the right direction. And many of them have started in the same exact places that you have. So it's always good to get a little outside influence from someone other than your trading coaches. Now, in today's video, as I mentioned earlier, we're going to take a look at a longer-term trading opportunity on the euro dollar, and we're going to shift that into a lesson on swing trading and kind of the pros and the cons of it. And for you guys that listen or watch until the very end, I have a very special gift for you. I'm going to give you something that will help you organize your trading, but you got to wait until the very end to find out about it. So without further ado, let's hop into the charts and let's take a look at the euro dollar. All right, traders, so I wanted to give you guys an update on the euro dollar. And for you guys that are new, I know we have newer traders watching these videos each and every week. This is a higher time frame setup that we first put on our radar about a month ago, and it really didn't end up playing out until last week. And I know we're going to have a conversation a little bit later about the pros and cons of swing trading, but if you're going to be a longer time frame trader, understand that you're going to be able to recognize setups, not just days, not just weeks, but sometimes months in advance. And although the market may bore you to sleep, it's very important that you kind of stay up to task with what's happening in the market. If not, you're going to miss that move. And I was very delighted to talk to a few traders this weekend who were sitting back and watching this setup for a month, over a month actually, and it finally paid off with the break that they were looking for. But let's give a little bit of a recap. And what we're looking at here was basically a very important level in the euro dollar. You can see we essentially had a structure shelf that started forming right here. If we kind of go back to the basics of reading a price chart, right? What we have is an initial starting point down here, right? So if you're following along, if you're new, feel free to open up a chart and write this down, or get a notebook out and write this down as well. But we have initial starting point down here. We have our initial structure high right here. This is our first move. We then have an outside return, so a pullback or retracement, whichever terminology you want to use, followed by a new structure high. And when we get this 3-point move, right, a move up, extension, pullback, extension, extension, pullback, extension, extension, pullback, extension. When we get that 3-point move, that is what solidifies us being in a trend. And in this case, because it's going up from the bottom left-hand corner of your screen to the top right-hand corner of your screen, we know that this is a bullish trend. Now, the way we teach here at Tier 1 Trading, I almost said the other company again, the way we teach here at Tier 1 Trading is strictly rules-based, meaning we have strict rules for what determines a continuation for a trend and what determines a violation of the trend. And what happened in this scenario is price action put in a very deep retracement. We also know that the deeper the retracement, the less strength the trend has. We put in a very deep retracement. We actually had a false breakout right down here. And then we started consolidating, really going sideways at this level. Now, four things, we'll see. If you watched my last video on the Aussie Canada, we talked about kind of the bouncy ball theory. This is another example of that, how we have a drop off, and then we have a high retracement right here, and then we have lower retracements before and ultimately breaking out. So the same theory we talked about in the previous video, you can put this to this scenario as well. But this is also a classic charting pattern called a head and shoulders pattern, right? If you look at kind of the lines I drew out right here, and if you look at yourself in the mirror, it kind of looks like a head and shoulders, right? Your left shoulder is right here, your head is right here, your right shoulder is right here, and this horizontal trend line, that is called your neckline. And when that neckline is violated, it is a key, right? A key that we can start predicting a reversal in trend. And that goes back to the same concepts of a lower low, lower close, a violation of our previous outside return, invalidating the current trend. So essentially what we have here is multiple signals that say this trend is most likely going to be over. And then we finally confirm that with the breakout. Now, don't worry if you did not catch the breakout, because I know not everyone is a breakout trader. For those of you that did, congratulations. I know you're having an exciting weekend. But for those who did not take advantage of the breakout, there are more opportunities, because I have a much longer term and a much lower prediction for this setup. And that prediction is going to come all the way down here, right? One is going to be at the 113 to 111 level. The second one is going to be at the 109, basically the 109 level. Let's put a line in the sand right here. So I do think we're currently trading at 114. I know it doesn't look like a long way, but we are on the daily chart, so take that into account. We are trading at 114 even right now, essentially. So there is a lot of potential for continued movement to the downside, at least 100 pips to kind of that first really safe zone of support, and then ultimately all the way down to about 109, which is going to be about a 500 pip move. And we can do some more technicals on there as well. I'm not going to get into details about the head and shoulders, but a few ways we can predict these levels as well is doing something like this. We can take what's called an AB equals CD pattern, or a 1-to-1 measured move, which means we take the length of our first retracement here, our first move down, we dragged it on to the pullback, and we project if the market were to make a 1-to-1 measured move, where would that put us? We can also do the same thing kind of with the breakout range of our descending triangle here, right? And you can see that's going to put us at that first level. For you guys that are into Fibonacci's as well, we can do something like this. We can take a Fibonacci retracement, drag it from our swing low to our swing high of our previous extension up. You'll see we'll get a 618 Fibonacci retracement right there, a 786 right at our lower level. And we can also take a Fibonacci extension, right, projecting where that extension may come to from our swing high right here. Think about it like the head down to the neckline of the head and shoulders pattern, and you're going to see we're going to get some Fibonacci confluence here as well. A 127 lining up with our 1618, and then a 1618 lining up with our 1-to-1 measured move and our 786. And what we teach traders here at Tier 1 Trading is that there's a style of trading called CTS trading, where basically you're taking all of the technical tools that we teach you, all the techniques, whether it's fibs, whether it's structure, whether it's equal measure moves, and you're putting it all together like a detective. So if you think of each of the techniques I just did as being like a clue, the more clues you have, the better case you can make for a price going to that level. And you can do the same thing for like entries and exits, whatnot either. But the point is looking for a move down to about the 113, 111 levels in here, and then ultimately a bigger move. This would be the more aggressive move down to that 109, 108 level. And the question is now, well, Keel, how do I take advantage of it? And whenever we go through a market, right, whenever we do our analysis on a daily basis, we start with a simple process called IPDE. That stands for identify, predict, decide, execute. It's a process that we do on every chart each and every day that we look at the market. So we identify what happened. Well, we had a violation of our previous level of structure support, right? we predict, right? Knowing that we have that violation allows us to make the prediction that price action is likely, ultimately, bigger picture, likely to continue lower. Now, this prediction phase is kind of a 3-point phase, right? We want to predict what is the market likely to do, right? Write this down. We want to predict what is the market likely to do, where is the market likely to go, and how is the market likely to go there. So the first one is easy because we have rules that tell us this. We predict that the market is likely to go lower, okay? Boom, simple. Next, where is the market likely to go? Well, we just identified a few levels that we can predict where price is likely to go to next. I didn't mention structure. It comes kind of second nature to me, but all of these levels are key structure levels as well. And that's structure is the main part of my philosophy. So that's always what I default to. So I apologize for not mentioning it. Sometimes I run on autopilot just because I do this each and every day so many times a day, but structure was key as well. So we predicted what price is likely to do. We predicted where price is likely to go. And now the question is, how is price likely to go there? And there's two ways that we can go there. One is we just continue straight down forever. We don't stop. The market just puts in one big candle that goes all the way to that level. All right? That could happen. Chances of a 500 pip move straight? Probably not. So what we would be looking for as we go down to our lower time frames, which are the time frames that we look to trade on, is a pullback. We're looking for an opportunity for the market to give us some relief, right? Similar to this move right here, a little bit of relief. And then we look to hop on board the next extension. And we know that we can look for that. It doesn't matter what time frame you're trading, whether you're going down to the 4-hour, the 60-minute, the 5-minute, whatever it is. We know that we can look for that opportunity until price ultimately reaches that destination, right? And that basically sets us up for the rest of our week. When we come into the markets, we know exactly what we're looking at. It kind of filters out half of the other ideas on our mind and allows us to really lock in and focus on the opportunity at hand. And of course, for you guys that are counter trend traders, you can do the exact opposite, right? You're still doing the same analysis, but instead of asking yourself, well, how can I get involved in a move down to these levels? You're waiting until price actually hits these levels, and then you're looking for a counter trend trading opportunity. So if we take a look down at the 4-hour time frame, this is going to be the lower time frame for me from the daily, right? And let's kind of give us a clean chart here. I hope that made sense. If it didn't, guys, and if you guys are new to trend, I mentioned a 14-day trial that we do on our platform. If you take advantage of that, I got this question on Facebook earlier. If it was a fundamental trader who's looking to learn a little bit more about the basics of technical analysis so we can kind of put that into his trading. Many people think that fundamental traders don't do anything with the technical. They just kind of use fundamentals. Well, that's not necessarily the case. They actually use fundamentals to form that bias, right? To form which way they want to be involved in the market. And then they'll actually go to technicals to look for the levels in which to involve themselves at, or the levels in which to look for profit targets and whatnot. So technical analysis plays its role in fundamental analysis as well. It can kind of go hand in hand. But what I'm looking at here when I go down to the 4-hour, and I'm going to zoom in, is I'm looking at the story that the market has given me. Now here on the 4-hour chart, it doesn't really look like much, right? The break of structure was right here, I believe. And to the common eye, it looks like we just had, 3 bearish candles followed by kind of a doji candle to end the week. But if you learn how to read a price chart, and for you guys that are on the platform already, this is what you learn in the foundation course. This is why it's very important to take the courses in order. You'll be able to see actually that this move is pretty significant, right? Because we see that price action put in a high momentum candle down, and the low of that candle, the extreme of that candle, came right here. Price action then started to retrace, and if you can imagine this in real time, this red candle right here was actually a bullish candle at one point, which topped off about here, right at the midpoint of the previous candle, before closing lower. And when I look at this, I look at the story, I read in between the lines, and we'll see this when we get down to a lower time frame. But if we look at candle number 1, right, candle number 1 essentially looked like this, right? We came down, and then we ended kind of a little bit higher than the ultimate lows. And then candle 2, made a different color, looked like this, right? We started off by rallying up, and then we came down and actually closed lower, right, than the open. And some of you guys are seeing this already, but when you look at this on a lower time frame, this is essentially going to be an outside return, right? When we think about a trending market, how does a trending market move, right? It ebbs and flows, it ebbs and it flows. So we can look at this level as being kind of that pullback, that retracement level. And if you were to go down to the hourly, you'll see a much clearer view of that, right? Right in here, right? Here's our extension down, here's our pullback. Between these two lines are essentially our area of consolidation. And this is going to be what's called our kill zone. And what I mean by that is this is the area in which we're going to look for, the first area in which we're going to look for price action to pull back into before giving us an opportunity to get short. So on your radar, I would put this zone between 114.31s and 114.80s on your radar for looking for a potential short opportunity here on the euro dollar. And understand that if you keep in mind the bigger profit level, there's a massive amount of risk reward. Again, it's gonna be different per each trader. But let's just say you take a trade right here, right in the middle, just because I'm picking a level. We want to have safe stops above our kill zone, right? Because if we get above our kill zone, we know that we're wrong, at least for this initial opportunity. There could be secondary opportunities. Sometimes the market tries to trick us. We give us something called a complex pullback. We talked about that the other day in the live room. But let's say you're looking for an opportunity like this where you're getting involved in this move and your risk is like this, right? Where do we mention price going to in the higher time frame, right? The first level of danger was the 113 even handle. And if we look at the 113 even handle, that is all the way down here. And that's probably going to line up, let me just see, with a 1618 Fibonacci extension. Come on, baby. Look at that, 1618 Fibonacci extension down there. So you have a massive risk reward looking at least a 3-to-1. And what this does is when you can consistently set yourself up with a risk reward like this, it allows you to be wrong. So many traders make a big deal over win percentage. I have to win this many times. And understand that the most successful traders in history typically had a win percentage that ranged between 20 and 40%. So if you think about the best of the best, right? I know this is contrary to what you hear on the internet with everyone talking about win 90% of the time. Typically, the best of the best traders of all time lost more than they won, but they were the best. And what you'll often find is that traders that have higher win percentage, traders that have 90% win percentages and whatnot, right? Typically when they do that, their losses are a lot bigger than their gains. And I'm not saying you can't be profitable that way. You certainly can. But it's a little tougher to do unless you're really skilled. So for you guys that are new, I want you to kind of eliminate the mindset that your win percentage has to be great. You know, think about it like this. In this trade right here, if you were to take it 3 times, right, a similar trade like this, if you were to take it 3 times, right, and lose 3 times, and then win on the 4th time, right, so you're a 25% trader, you'd still be in profit. And of course, you'll probably win more than 25% of the time, but just to give you guys an example. So that's what I'm looking for here on the euro dollar. This is certainly going to be something that we're tracking during the week. Greystone has the Monday trading edge video. So if the markets start to move on the Monday open, I'm sure he'll update you on this scenario. But certainly a trading opportunity I think you need to look for. And one more quick thing. Now, one of my jobs as a trading coach is to really identify problems and help traders find the solutions. And one of the problems, or I guess one of the excuses that many traders make is, Akil, I don't think I can do this trading thing because I don't have the time. And that's a common excuse for a lot of things in life. When I don't have the time to do this, I don't have the time to do that. You do have the time, you just have to make the time. And sometimes that means sacrificing something else. But for traders that don't have the time to say actively trade, you can't do the day trading where you're sitting in front of your screens watching charts for hours and hours, we always push them to try out a swing trading approach. So practice trading on the higher time frames. And the concepts are exactly the same. And one of the cool things about the markets is that it works in what's called fractals. And essentially that means the market moves the same on the monthly charts, the weekly charts, the daily charts, the 5-minute charts, the 1-minute chart. So everything you learn about trading, all of the technicals, can work on any pair. They can work on any time frame. They can work on any market. Now, that's not saying every strategy does, but the basic elements of technical analysis and price movement, they do. Now, when people move to swing trading, here's one of the problems. Many people think that because they don't have to actively look at the markets, they don't have to treat their trading like a business. They can kind of come in and pop in and take a look at charts whenever they want. And that's not the case. Even if you're a higher time frame trader, you have to be just as organized as someone who's actively watching the markets. And I'll tell you why. Good opportunities don't come that often. And for any of you guys that have done back testing, you know that as a swing trader, you may only get a handful of trading opportunities a year, a handful of trading opportunities a month. And what that means is that if you were to miss one of those trading opportunities, it's a much bigger hit than, say, a day trader that misses an intraday opportunity. So it's very important to stay organized and not miss trading opportunities if you want to go about being consistently profitable. And we had a very nice discussion on this in our live room session this week. So check it out.
Pure resistance here in New Zealand. Oh, there we go. Look at that. Another one. Who remembers this one as well? See, here's the thing, right? You get some of you guys get on my case for not doing the longer time frame trading, right? Sean says impossible to catch. No, we caught this, Sean. Who remembers this trade? Anybody? This had to be a month ago.
But we have a bull flag here, right? You have the flagpole shooting up, and we have a bull flag forming, and this type of pattern formation typically breaks out to the upside. We go to our 4-hour chart, and you see that we have a potential advanced pattern formation setting up here on the 4-hour, right? We have an initial X leg right here, swing low to swing high. That's going to be our X to A to B, coming into a 618 Fibonacci retracement, B to C. I'm going to double check this just to make sure it's right. Pretty good, but my eyes sometimes lie. Ooh, yep, just nipped it, so we're good there. B to C, giving us a valid C leg right there, and then a decompletion down at our 127, which is going to give us a potential bullish Gartley pattern. And if you notice this bullish Gartley pattern, right, look left, structure leaves clues, it comes at essentially a retest of the previous lows in our flag pattern. So if you're the type of trader, right, we teach 3 ways to trade breakouts, right? Setting yourself up before the breakout, during the breakup, or after the breakout. If you're someone that trades patterns before the breakout, meaning you like to get involved, in this case, at the bottom trend line, this is a perfect excuse, that's a bad word, but a perfect excuse to involve yourself in a trading opportunity in the direction of the breakout.
But this is the life of a swing trader, guys. We saw it with New Zealand dollar, where it was what, 2 weeks ago. We see it right here with Euro New Zealand, right? Just like on the lower time frames where we identify a trading opportunity in the morning and it may not fill until an hour later. As a swing trader, you're going to identify these setups months in advance sometimes. And the hardest part, right? People think it's always a positive, right? It's a gift. Where it's like, okay, well, it's easier to trade the higher time frames because I have more time to think about it, right? Do you guys ever think like that? It's easier to trade swing trading, be a swing trader because I have more time to think about it. Day trading, the action happens so fast, it's right there. I might miss it because I'm not as fast at doing my analysis. I can't watch that many charts at the same time. And that's all true, but like anything in life, there's a positive and there's a negative. And the negative about swing trading, if you're not organized, you're going to fall asleep, right? Let me ask you this. Have you guys ever been, depends on where you're at. You ever been driving on the highway for a long trip and you just get on autopilot? Whereas like before you know it, it's like 20 minutes later, you're like, huh? What? You can fall asleep. Yeah, I've done that before, Daniel, with audiobooks all the time. I'll be driving, I'll be listening to like an audiobook, and before you know it, it's like 3 chapters later, and I'm like, what? What the heck? Especially if you're driving through like just highway with no landmarks. And that's the same problem that swing traders have is, yes, you have that. I mean, there's no excuse for missing this, right? You had 3 weeks of notice. 3 weeks of notice for this. But the hard part is that it will bore you to sleep, right? You'll come back the next day and be like, nothing happened. The next day, nothing happened. The next day, nothing happened. And you come back every day for like a week and nothing happens. And then before you know it, what do? You kind of just assume nothing's going to happen, right? And then before you know it, Akil comes back to it in a live room. I show you the big old breakout, and you're like, oh no, I was supposed to take this. I was supposed to take this and I didn't. For you footballers out there, right? It's like Spain, right? Pass, 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 pass. Before you know it, someone cuts, boom, goal. For you basketball players, it's like James Harden, right? Dribble left, dribble right, dribble left, dribble right. Oh, pull up shot, boom, 3-pointer with the foul and one. That's the hard part of swing trading. It's not all positive. At least with day trading, right? It's in the now. You know that pound dollar is on your radar. You know that you should be watching it. Now, you may miss an opportunity because of the move, because it happens maybe fast, but at least you're alert. And this is why it's so important to be organized, right? We gave you this in the course. I'm going to load up the Word version of it, but we gave you this in the course. Pre-market checklist, right? Make the habit. Do this every day, right? Print this out, put it on your tablet, right? Write down exactly what's in your watch list. If you make the habit of writing it down each and every day, you're not going to forget about it. Even if you have nothing on the radar, you got to go through the process each and every day. Look at your portfolio. Have a consistent portfolio. If you don't have a consistent portfolio, you're going to be all over the place and miss even more opportunities, right? Sit yourself down 6 o'clock in the morning, whatever time it is. Go through your 10 pairs, your 4 pairs, your 6 pairs, whatever your count is, and go through one step at a time. Euro dollar, higher time frame trend. Okay, I'm a swing trader. It's been bullish for the last 2 years, but I still got to write it down anyway. Bullish. Key resistance. Well, nothing has changed. You've been in consolidation. That same level of structure support we looked at, right? That head and shoulders neckline is still there, but who cares? Write it down again. Key support. Write it down. Notes. This may change a little bit, but if you're a swing trader, write it down again. Let me ask you this: what's the downside in doing it? What, it takes up 20 minutes of your day? You got to wake up early? Could any of you guys give me a downside to not being organized? To not paying attention? Give me something. There is no downside. Now, what's the upside? What's the benefit? Because you know good trades don't come too often, especially if you're a swing trader. Many of you guys are doing back testing right now, and you're telling me, Akil, I only got 10 trades a year. Yep. Jamie says you're a step ahead. You're ready to pounce it up. Yeah, you take advantage of the opportunity you're supposed to, right? Think about it like this. Why are you doing all this work if you're not going to reap the benefits? Why are you going to work if you're not going to collect a paycheck? Why? Why? If you're going to put in all this hard work to become a consistently profitable trader, take your profits.
So I hope you guys found that helpful. And here's what I want to do. I want to give you that pre-market checklist that I talked to you about in the video for free. And all you have to do is this. If you go to the description box below, or wherever you're watching this video at, could be below, above, who knows, click the link. That's going to take you to a page on our website where you can download that pre-market checklist for free. And hopefully that's something that makes its way into your normal trading routine, allows you to become more organized in your trading. And well, if you've been following along, you know that consistent analysis plus consistent execution equal consistent profits. So I appreciate you joining me as always. Once again, if you are new or if you're watching and you're not subscribed already, it's a massive help if you hit that subscribe button. Also, hit that like button and please share this on social media, right? teach one, reach one. All right, the more people that we can reach out to and spread the word to, the bigger and the better community that we can grow. So I'll see you guys tomorrow in the Q&A session. We're gonna have a nice talk about, I'll let you guys wait until tomorrow to hear about that. But until next time, plan your trade, trade your plan. Good luck in the markets this week, traders.